Hi and welcome to Swissquote's Daily Market Talk. It's Tuesday, January 21st. Donald Trump's inauguration went almost smoothly yesterday. Almost smoothly. So Donald Trump's inauguration went almost smoothly yesterday, as I said. The US markets were actually closed. The Chinese stocks were in a better mood on a good phone call between Donald Trump and Xi Jinping on Monday's trading session, and the European equity markets actually opened higher, stagnated with hesitation, but sentiment got better toward the end of the session. Now, surprise, Trump didn't throw a punch to China in the first few minutes of his presidency, a risk that everybody was actually fearing despite the good phone call between Xi and Trump. And the Wall Street Journal reported that Trump would study the trade policies and the relationships with China, Canada and Mexico instead of imposing tariffs. So that gave hope that Trump's trade policies wouldn't be as aggressive and as bad as he promised. So the US and European futures rose initially as a reaction to that, and the US dollar fell significantly. So the euro dollar, for example, rallied all the way up to 104.34 level after opening the new week near 102.85 mark, while cable went from below 122 to 123.44 level. Even the Canadian dollar and the Mexican peso gained more than 1% against the greenback initially. And also, the gap between the gold and copper prices between New York and London exchanges tumbled, and they tumbled on the softened tariff threats or the perception of them. But wait, because US dollar jumped again, erasing losses versus most major currencies, as Donald Trump later came up and said that Canada and Mexico could be subject to 25% tariffs from February 1st. And many people obviously thought, boy, if he imposes 25% tariffs on Mexican and Canadian imports as fast, what would he do with China? So yes, the US futures are slightly up this morning. The European futures are down. The US dollar is higher again, and the CSI 300 index has given back the early session gains in China. So, welcome, ladies and gentlemen. This is the kind of volatility and unpredictability that we will be served for the next 4 years of Trump presidency, probably. And before I forget, the Trump coin tanked 20% yesterday after Melania Trump launched her own coin. And, well, I don't know what to say about that. It's just what it is. Okay, so this morning, we are back to the inflation worries on Donald Trump's tariff threats that pushes the US dollar higher against many majors out there, as I said. So looking at the euro dollar is back below the 104 level this morning. Technically speaking, yesterday's rally in the euro against the US dollar didn't damage any medium-term levels. The rally remained short of the 50-day moving average and also the minor 23.6% Fibonacci retracement on September to now sell-off in the euro dollar, a big part of which was actually explained by the potential negative impacts of Donald Trump trades on European economies and the European economic tissue. So we remain right in the middle of that narrative right now. The outlook remains comfortably negative for the euro. The tops look like good selling opportunities due to the hawkish risk regarding the US Federal Reserve that is expected to face higher inflationary pressures due to Trump policies versus dovish risks facing the European Central Bank on potential negative impact on European economic tissue of these Trump policies. If of course inflation in Europe is under control. But yesterday's German PPI data that came in negative on a monthly basis kind of gave some relief to the European Central Bank those. So similar thinking goes for cable. Yesterday's rebound in sterling versus the US dollar didn't threaten any important levels, and sterling remains under the pressure of this discomfort that market participants are feeling regarding how the British government will be delivering the promised growth when its finances are so tight. In Japan, the dollar yen tested 50-day moving average to the downside this morning. Here, actually, the hawkish Bank of Japan bets regarding a highly possible interest rate hike in Japan this Friday keeps the Japanese yen bulls in charge of the market, and that actually gives the Japanese yen room to extend its gains against the US dollar, at least until the Friday's BOJ decision. Elsewhere, the Aussie dollar, which also jumped more than 1% on Monday on hope that Trump's tariffs wouldn't be that aggressive, well, is again under pressure this morning, while the dollar franc in Switzerland sees support near the 90 cents mark. So the question is, it always is, what's next? So no one knows what's next really, but the positive pressure on the US dollar against most majors out there, except maybe the Japanese yen, should continue, and it should continue on the back of these fears that tariffs would boost inflation in the US and maybe elsewhere as well, and keep the Federal Reserve hawks close to the market. So on the first day of Donald Trump's presidency, the Fed funds futures are pricing a possible 25 base point rate cut from the Fed in its May monetary policy meeting, but the probabilities are close to a coin flip, mind you, so everything is subject to change, and sometimes, and especially at these times, they are subject to rapid changes. In the energy space, because we can't talk about Trump without talking about his energy policy, right? So Donald Trump unsurprisingly wants to scrap everything that pretty much has to do with climate, DEI policies that would promote diversity, equity, and inclusion of people, kind of unnecessary stuff, and declare an energy emergency to obviously support the use of fossil fuels, increase the US domestic production, and also replenish the strategic petroleum reserves of the United States. Now, the thing is, increasing domestic production would soften the price of crude, but replenishing the strategic reserves would pump oil out of the market and push its price higher. So in the short run, replenishing the strategic reserves could actually push oil prices higher, because doing that would withdraw oil from market again, and it's to do that quite quickly, while increasing production takes a bit more time. But because Donald Trump doesn't want energy prices to go up, because he likes them cheap, he would be advised, I think, to act slowly on the strategic reserve side, which could have a limited impact on oil prices at the end of the day. What I think is, in all cases, the energy companies will be well supported by Trump policies over the next 4 years, and we could see further gains in the sector on the rollback of climate-focused policies. Well, that will come obviously at the expense of clean energy and climate-friendly sectors. Voila. Now, let's change subject, if you will. Netflix is due to announce its fourth quarter results today after the closing bell. Well, the company is expected to almost double. Yes, it's expected to almost double its earnings per share compared to the same time last year, and post an almost 15% growth in its revenues. So that's strong expectations, and a strong report could actually send the stock price to above $900 per share again and bring that $1,000 psychological mark back on the table, while a disappointment could trigger a deeper downside correction in Netflix stock price, with the next important support seen at the $795 per share level, which is the 100-day moving average, and $756 per share, which is the minor 23.6% Fibonacci retracement on 2022 to today rally. But in all cases, Netflix remains an investor's darling, mind you. 21 analysts out of 30 have a buy rating in Netflix on TipRanks. 7 things holding the stock is just fine, and only 2 issued sell recommendation over the past 3 months. Other than Netflix, well, do not forget to watch the European ZUI Sentiment Index today, and also the Canadian CPI data. They're all out today, but also keep in mind that we can maybe no longer look at the economic calendar, the earnings calendar, schedule events and meetings and say that the market moves will be mostly driven by those events. Because a comment from Donald Trump on his platform or anywhere could land at any time on the market and change the whole picture. So again, welcome everyone to Trump Act 2. So this is all for today. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.